The global digital currency is coming. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this, proposed global digital currency that's been put forward by central banks around the world and the BIS. So I thought we'd have a look at a press release, then an executive summary from the BIS, and then some media responses to this. But what's most concerning is if this is just a step towards a global currency, a single currency, well, if you don't have your own currency, do you actually have a nation state anymore? Or are you just another administrative region? I'll let you answer that comment in the questions, guys. Just have a look at what's happened to the EU. Look at external parties forcing their political will and decision making, usually unelected, on other nations. So, central banks and BIS published the first central bank digital currency report laying out key requirements. 7 central banks and the BIS released a report assessing the feasibility of publicly available CBDCs in helping central banks deliver their public policy objectives. So is this just another evolution of our fiat monetary system, just to kick it that little bit further down the road? Would this be a good thing for precious metals? Would this be a good thing or a bad thing for crypto? The report outlines foundational principles and core features of a CBDC, but does not give an opinion on whether to issue. Central banks to continue investigating the CBDC feasibility without committing to issuance. A group of 7 central banks, together with the Bank for International Settlements today, published a report identifying the foundational principles necessary for any publicly available CBDCs to help central banks meet their public policy objectives. The report, Central Bank Digital Currencies, Foundational Principles and Core Features, was compiled by the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, the Federal Reserve, Swedish Risk Bank, the Swiss National Bank, and the BIS, and highlights 3 key principles for the CBDC. Coexistence with cash and other types of money in a flexible and innovative payment system. Now, here's the issue. The IMF released a blog about negative interest rates and how, you have a digital currency in your bank, you've got physical currency, and then they create an exchange rate between the two so that cash is no longer a safe haven from manipulation. Will that drive more people into real assets? We'll have to see. Any introduction should support wider policy objectives and do not harm the monetary and financial stability. Features should promote innovation and efficiency. The group of central banks will continue to work together on CBDCs without prejudicing any decision on whether or not to introduce CBDCs in their jurisdictions. Notice how we're jurisdictions. I'm noticing that more and more. Remember the cash ban and how you had all these different representatives come and give testimony to the Senate, and that rather just dodgy character representing some of the charities, and he was referring to countries as jurisdictions. It's just interesting to see that emerge more and more. So, this report is a real step forward for this group of central banks in agreeing the common principles and identifying the key features we believe will be needed for a workable CBDC system. As well as helping central banks to meet their public policy objectives, the report provides a useful framework for how central banks provide money and support payment systems in an ever-evolving digital world. This group of central banks has built a strong international consensus, which will help light the way as we each explore the case and design for CBDCs in our own jurisdictions. And this is Sir John Cunliffe, the group co-chair, Deputy Governor of the Bank of England. Based on these principles, the group has identified the core features of any further CBDC system, which must be resilient and secure to maintain operational integrity, convenient and available at low cost or no cost to end users. Even if it is low cost, the end users always pay. underpinned by appropriate standards and a clear legal framework, have an appropriate role for the private sector, as well as promoting competition and innovation. Further developments of CBDCs require a commitment to practical policy analysis and applied technical experimentation. While this has already started, the speed of innovation in payments and money-related technologies requires the prioritization of collaborative experiment. Further activities will include exploring other open questions about CBDCs and the challenges of cross-border payments, as well as continued outreach domestically and with other central banks to foster informed dialogue on key issues. Work by the BIS Innovation Hub, which serves the broader central banking community, will contribute to this objective. So is this just another step to turn our nations into jurisdictions, to lose the sovereignty and the rights of our own nations? If we don't have control of our own currency, what do we have control over? So let's have a look. This is the executive paper, and the Bank of Japan, all the banks that are involved in this. And let's just go through some of the key messages. CBDC issuance and design is a sovereign decision for each jurisdiction, again that word, based on assessment of how CBDCs will support public policy objectives through the provision of a safe means of payment. This group has outlined foundational principles and core features of a CBDC, which recognize the points above to guide exploration and support public policy objectives. A CBD robustly meeting these criteria and delivering the features set out by this group could be an important instrument for central banks to deliver their public policy objectives. This is it. Do we want to give more power, more capacity to these central banks? I mean, it's worked so well in the last 100 years, hasn't it? Except for all the boom and bust cycles. The problem is there's just a lack of appreciation of the actual business cycle. No appreciation of the theories in the Austrian School of Economics. It's completely considered heterodox. But this is all seems to be lining more and more to, MMT. A centrally controlled global currency. Well, say goodbye to nation states. That really is the beginning of that. Look at what's happened in the EU and the restrictions on those individual nations, on unelected people in Brussels, just ignoring referendums, ignoring what the people are saying, just doing what they're doing, implementing things for the greater good. A CBD could promote more resilient, effective, inclusive, and innovative payments. The potential financial stability implications of a CBDC need to be considered. They've got cross-border implications. And for central banks contributing to this report, a common motive for exploring CBDCs is its use as a means of payment. CBDCs may offer opportunities that are not possible with cash. Introducing a CBDC could have financial stability implications that would need to be assessed. So they're always talking about these financial stability implications. All right, is our financial system even stable at the moment? It's teetering on the edge. Australia now, $1.1 trillion of bonds will be out there in a couple of years, in 4 years' time. In 4 years' time, they are intervening in the market left, right, and centre. They're doing everything they can to prop up housing. It's the only game we have in town here. What's going to happen when that runs out? What's going to happen? Then it'll be a push. Interest only, more immigration probably, bring more people in. And who's going to pay? You're going to get a two-speed economy. You're going to get those that are on the property bandwagon and are reaping all the rewards, and those that aren't on there. And people are just struggling to jump on. The question is it a Ponzi scheme? And will it fall down? Or will the government just kick that can down the road, do whatever intervention they can? And will then that manifest in inflation shooting to the moon? So principles and features. The central banks contributing to this report agree on the foundational principles that will guide the exploration. And let's have a look here. I'm in design and technology. I'll let you go through this in your own. Let's have a look at the foundational principles that they keep mentioning. 1. Do no harm to wider policy objectives. New forms of money supplied by the central bank should continue supporting the fulfillment of public policy objectives and should not interfere with or impede a central bank's ability to carry out its mandate for monetary and financial stability. 2. Ensure coexistence and complementary of public and private forms of money. Central banks have a mandate for stability and proceed cautiously in this new territory. Different types of central bank money, new CBDCs, and existing banknotes, reserve or settlement accounts should complement one another. In addition, they should coexist in a wider payment ecosystem that supports public policy objectives and will include and support robust private money, commercial banking accounts. So, I mean, is this going to be an increase of the money? Is this going to be instant inflation? If all of a sudden you have this instant money, going back to the traditional definition of inflation, increasing the money supply. Promote innovation and efficiency. Without continued innovation and competition to drive efficiency and effectiveness of a jurisdiction's payment systems, users may adopt other less safe instruments or currencies, leading to less reliable payments, economic and consumer harm, and the potential erosion of monetary and financial stability. In other words, control. The potential erosion of central bank control. The payment ecosystem is comprised of public authorities, in particular the central bank, and private agents, commercial banks, and payment service providers, both of which have roles to play in ensuring a high level of innovation. What happens if they have this implemented? And, well, as we've seen with all of these central payment processes, we've seen MasterCard, PayPal, deny service to people based on their political ideological position or their opinions. Do we want that with this? We saw yesterday with calls here in Australia, where all of their checkout computer systems failed, so people couldn't buy food in any of their shops around the country. These things aren't without faults. So, core features. So, meeting the basic principles requires a CBDC to have certain core features covering the CBDC instrument, the underlying systems, and the broader institutional framework, which are the features: convertibility, convenience, accepted and available, and low cost. Now, some of these things, if you're talking about cryptocurrency, some of them aren't low cost, some of them aren't convenient, they're not convertible very easily, and they're not acceptable. So I know there's a lot of people that are keen on crypto and think Bitcoin will be the future, or Ethereum or XRP will be the future, but I mean, it's got none of these things, and they're fundamentally right there. So the system has to be secure, instant. Again, some cryptos aren't like that. Resilient, available, it has to have the throughput, it's scalable, interoperable, and flexible and adaptable. So it needs to have a clear and robust legal framework, and there have to be standards. So this is it. Well, this is certainly very different to cryptocurrency right now. It really is the Wild West. It is the Wild West. So let's have a look. I'll let you go through the rest of this on your own. Let's have a look at Zero Hedge, how they're looking at this this situation. So the circle is complete. Bank of Japan joins the Fed and the ECB in preparing for the rollout of digital currency. First, it was the Fed, then the ECB, and now the Bank of Japan. The world's central banks are quietly preparing to unleash digital currencies on an unsuspecting populace in one final last-ditch attempt to spark inflation and do away with the current monetary orthodoxy, which has failed to push living conditions for the masses higher, but more importantly, has failed to inflate away a growing mountain of insurmountable global debt. On Friday, Bank of Japan joined the Fed and ECB when it said it would begin experimenting on how to operate its own digital currency rather than confining itself to conceptual research as it has to date. Digitization has advanced in various areas of home and abroad on the back of rapid development of information communication technology. There is a possibility of a surge in public demand for central bank digital currency going forward, considering the rapid development of technological innovation. While the Bank of Japan currently has no plans to issue CBDC, from the viewpoint of ensuring the stability and efficiency of the overall payment and settlement systems, the bank considers it important to prepare thoroughly to respond to changes in circumstances in an appropriate manner. Well, here's a question for you all. If you could get a home loan directly from your central bank at the rate that the central bank is charging out to other banks, would you do it? If they have the capacity, if they can use this, if say you can get their central bank digital dollars at 0.25%. What do you think? The bank explained that it might provide general purpose CBDC if cash in circulation drops significantly. The private digital money is not sufficient to substitute the functions of cash, while promising to supply physical cash as long as there is public demand for it. The move, as Reuters reports, came in tandem with an announcement by a group of 7 major central banks, including the Bank of Japan, on what they see as core features of a central bank digital currency, such as resilience and a clear legal framework. It also falls in line with the new Japanese Prime Minister Yoshihide Suga's focus on promoting digitization and administrative reform to boost the country's competitiveness. In a report laying out its approach on CBDC, the Bank of Japan said it will conduct a first phase of experiments on basic functions core to CBDCs, such as issuance and distribution, early in the fiscal year beginning in April 2021. The experiments will be part of the Bank of Japan's efforts to look more closely into how it can issue general-purpose CBDCs intended to be used widely among the general public, including companies and households. Naturally, to avoid sparking a panic that paper money is on the way out, and thus promoting the population to hoard it, the Bank of Japan said the CBDCs will complement, not replace, cash and focus on making payment and settlement systems more convenient. However, how exactly it is more convenient for the central bank to be able to remotely extinguish any amount of money in one's digital wallet without notice remains a mystery. Well, yeah, this gives them complete control. This will give them complete control. They can adjust inflation. Think about it. They can adjust inflation at the flick of a switch. If everyone had a digital wallet, and all of a sudden they're saying, okay, we're at the MMT world. Oh, inflation isn't high enough. We need to stimulate the economic impact. Let's instantly have every citizen get double their money, or $10,000 instantly. And then, one thing about that, one advantage about that as opposed to the current method of, how would that affect from the Cantillon effect? And why isn't this picture coming up? Oh, well. This is the effect refers to the change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point and therefore a specific flow path through the economy. So if this injection point became instantaneous in people's digital accounts, then, what would be the effect of the flow path in the economy? It would spread out much further. Would it result in the same amount of bubble? Would it have the same bubble effect? There's a question for you. There's something for the modelers. But then again, as well, MMT, to fight inflation, they have to tax money instantly. So this is another step closer to removing that privilege away from the government as well. Just give it to the central bank. Let them manage that process. They'll generate the money. They'll bring it in. They'll manage the whole thing. A whole bunch of unelected officials. Can you see the danger in this, everyone? Can you see the danger in this? There's two sides of it. There's convenience, and there's the terrifying dystopian future that it could lead to. Unlike the Fed, the Bank of Japan plans to have financial institutions and other private entities serve as intermediaries between the central bank and end users, rather than have companies and households hold deposits directly with the BOJ. While the BOJ currently has no plans to issue CBDC, it's important to prepare thoroughly to respond to changing circumstances, the report said. In the second phase of experiments, the Bank of Japan will look at the potential design of CBDCs, such as whether it should set a limit on the amount issued and pay a remuneration on deposits. In the final step before issuance, the Bank of Japan will launch a pilot program involving private firms and households. The Bank of Japan added, it would be desirable for the CBDC to be used not only for domestic but cross-border payments. In short, don't worry, this is just an experiment. But once operational, it will take over the entire existing monetary system. And then the tax department will know every single transaction that's made to the instant. All that information. And, what if then you combine it? You combine it with the social credit score points and go, sorry, your political opinion is down 2 notches. You're only allowed to spend this much. Or maybe they could target monetary distribution to particular people. They could build a profile up on you, like those the phone games that they know who are the whales. Okay, that person is. We need to stimulate. This sector of the economy, so deploy money to these people. That seems like it has some quite terrifying potential, doesn't it? If you really just start peeling the onions away, and then you combine it with social credit scores, and it gets terrible. So, to be sure, having complete control over the entire monetary transmission mechanism, all the way to each quantum of currency in circulation, has been a central bank has been a central banker's dream. A key reason for negative rates was for banks to force consumers to pull their money out of the bank and spend it, thus lifting the velocity of money. Alas, we've shown previously, the lowest interest rates in history merely prompted even more savings and less spending, resulting in catastrophic consequences for the financial sectors wherever negative rates were adopted, such as Japan and Europe. Well, could we have a point where you have your digital money that will expire over time? Not even bother with negative rates. If you don't spend it within a week, it expires, or you start losing more amounts. And then they monitor you if your behavior isn't good enough, if you're not spending your money wide enough, or maybe even worse, you can only spend it in certain regions. So they give you, here's an extra $10,000 that you can only spend in this city. It will all be possible with this. Imagine how finely they could control and centrally plan this economy. Imagine that. You could really go down some dangerous halls here. Until now, Japan has been cautious about moving too quickly on digital currencies, given the social disruption it could cause in a country that has the world's most cash-loving population. But China's steady progress towards issuing digital currencies has prompted the government to reconsider, especially if China takes the lead in sparking a new revolutionary tide once it converts its entire population to digital currency, and pledged in this year's policy platform to look more closely at the idea. Of course, the real reason behind central banks' urgency to implement digital currency is simple and has nothing to do with serving the population, increasing facility of transfers, or enhancing stability and efficiency of payments and settlement systems. It has everything to do with having discrete control over inflation and enabling worldwide helicopter money. This is how double-line fixed income portfolio manager Bill Campbell described it in his latest must-read note, The Pandora's Box of Central Bank Digital Currencies. With QE, central banks have printed excessive reserves that have benefited only the very wealthy and large institutions. The innovation of digital currency system, as described by MasterCard, could deliver stimulus directly to consumers. Such a mechanism could open veritable floodgates of liquidity into the consumer economy and accelerate the rate of inflation. While central banks have been trying without success to increase inflation for the past decade, the temptation to put CBDCs into effect might be very strong among policymakers. However, CBDCs would not only inject liquidity into the economy, but would also accelerate the velocity of money. The 1-2 punch could bring about far more inflation than central bankers bargain for. When first implementing QE, central banks promised that this measure would be temporary and would be unwound after the crisis ended, a pledge I've doubted for a while. Central banks, as we've known, have perpetuated QE as part of their updated toolbox of monetary policy. The first use of digital currencies in monetary policy might start small as policymakers, out of caution, seek to calibrate this experiment in quasi-fiscal stimulus. However, such initial restraint could give way to growing complacency and greater use of the tool, just as we saw with QE. He's right. The temptations of CBDCs are not limited to excesses in monetary policy. CBDCs also appear to be an effective mechanism for bypassing the taxation, debt issuance, and spending prerogatives of government to implement quasi-fiscal policy. Imagine, for example, the ease of enacting modern monetary theory via CBDCs. With CBDCs, the central banks would possess the necessary plumbing to directly deliver a digital currency to individuals' bank accounts ready to be spent via debt card. Let me quote again from Charles I. Blossier's warning of 2012. Once the central bank ventures into fiscal policy, it is likely to find itself under increasing pressure from the private sector, financial markets, or the government to use its balance sheet to substitute for other fiscal decisions. With a flick of the digital switch, CBDCs can enable policymakers to meet or cave into those demands at the risk of igniting inflation conflagration, abandoning what little still survives of sovereign fiscal discipline, and who knows what else. I hope the leaders of the world's central bank will approach this new financial technology with extreme caution, guarding against its overuse or outright abuse. It's hard to be optimistic. Soon our monetary Pandoras will possess their own box full of new policies, perhaps too enticing to resist it. Here is another reason why it's hard to be too optimistic. Without virtually any public discourse or debate, central banks are now so far down along in the process that they're just steps away from rolling out a private sector venture with one of the largest digital payment processors in the world. Below is a press release that virtually nobody noticed in early September from none other than the electronic payment giant MasterCard, which it revealed it had launched the central bank digital currencies testing platform, enabling central banks to assess and explore national digital currencies. With the global economy racing to embrace digital payments, central banks also are looking to the future and investigating how to support innovation while maintaining monetary policy and financial stability. As they issue and distribute currencies, in fact, 80% of central banks surveyed are engaging in some form of central bank digital currencies work, and about 40% of central banks have progressed from conceptual research to experimenting with concept and design, according to a recent survey by the BIS. Today, MasterCard announced proprietary virtual testing environment for central banks to evaluate CBDC's use cases. The platform enables the simulation of issuance, distribution, and exchange of CBDCs between banks, financial service providers, and consumers. Central banks, commercial banks, and technology and advisory firms are invited to partner with MasterCard to assess CBDC tech designs, validate use cases, and evaluate interoperability with existing payment rails available for consumers and businesses today. MasterCard is a leader in operating multiple payment rails and convening partners to ensure a level playing field for everyone. Really? Do we trust MasterCard to do that? From banks to businesses to mobile network operators, in order to bring the most people into the digital economy. MasterCard wants to harness its expertise to enable the practical, safe, and secure development of digital currencies. Central banks have accelerated their exploration of digital currencies with a variety of objectives, from fostering financial inclusion to modernizing the payment ecosystem, said Raj, I'm not going to pronounce that, Executive Vice President, Digital Asset and Blockchain Products and Partnerships, MasterCard. MasterCard is driving innovation with the public sector, banks, fintechs, and advisory firms in the exploration of CBDCs, working with partnerships that are aligned to our core values and principles. This new platform supports central banks as they make decisions now and in the future about the path forward for local and regional economies, he added. Shella Warren, head of blockchain, digital assets, and data policy at the World Economic Forum, said collaborations between public and private sectors in the exploration of central bank digital currencies can help central banks better understand the range of technology possibilities available with respect to CBDCs. Central banks can benefit from support in exploring the option sets available to them with respect to CBDCs, as well as gaining insight into what opportunities may be forthcoming. Finally, why are central banks using blockchain as the backbone for all digital currencies? It has nothing to do with their fascination with Bitcoin or the fear that cryptocurrency can become dominant, although there certainly is an element to that. The real reason is that blockchain allows every single discrete currency unit, and here it is, whether it is the digital dollar, digital euro, digital yen, or digital yuan, to be tracked from its digital inception through every single transaction, and to which wallet it can be found in at any given moment. In short, blockchain-based digital currencies will allow central banks to have a real-time map of absolutely every monetary unit in circulation, something they can't do with anonymous paper money. And of course, when push comes to shove, central banks will be able to warn the public the digital money in their digital wallets may soon expire, sparking an inflationary flood of spending with the flick of a switch. And I think it has even greater potential risk. I think, well, look at the world where it's going. What if you have the wrong political opinion? What if you're in the wrong area? What if you're driving around and saying, sorry, you're not approved to spend money in this part of town? Welcome to the future, guys. What do you think? As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.